And then I'm going to go to my live stream. All right, we live on Facebook. 1 second. I gotta do some housekeeping. I gotta go to my Facebook page. We live. You guys. I got my brother with me today. So let everybody know. Tune in, tune in. Okay, so I need to go. You guys know I gotta get all set up first. Let's see. All right. Okay, edit audience. And then go public. So Vega, you could actually go to my Facebook page and share it on your page too, if you want. So let's see. All right, and let me go to my phone. What's up, Facebook? It's Real Estate Tuesday, Sessions with the Leader. All right, you guys know on Tuesdays, I give you guys, real estate tips, real estate information, and I bring on guests that can help you. And I want you guys to really start contacting these people and stuff. So I got my boy Lavega Sims on the Zoom tonight to teach you guys about loans. Now let me tell y'all something. How long has it been, Vega? God, when did we meet?
Early 2000s.
Early 2000s, but it wasn't about real estate.
No,
It wasn't about real estate. We was both in the music industry world, okay?
Mm-hmm.
Now you was representing who, Vega?
Back then it was Bueno.
Bueno. All
Mm-hmm.
right. Yeah, I met him with Bueno, right?
Mm-hmm.
So by us being in the same industry and stuff, we stay connected and stuff, and then find out we got both into the real estate world and stuff.
Back to
So
Mundo.
let's kind of go back a little. So
Okay.
did you manage Bueno?
Yeah. Yes, I
Okay.
was manager.
For how long?
I managed them, and then we actually owned the label together like 50-50.
Okay. Okay. So
Yeah, but I've done a lot of management work too.
okay.
Wore a lot of hats.
You didn't rap or anything, did you? Or
Yeah.
anything?
No.
Okay. He didn't.
Nah, nah. Even I
So
have a real musical ear. Still love music to death. Something I grew up on, but nah, never done anything as far as, making beats or music or rapping or anything like that. I'm good at business. I graduated from Sac State with a degree in business administration. So when we started, company a long time ago, everyone was trying to figure out what they wanted to do or what position they could hold. And for me, doing business was the best thing.
oh, okay, cool. I thought I had it on mute. Trying to make so when people chime in. So what made you get into like loans? And I know at first you was with with Wells Fargo at first, right? Was that your first company,
No,
Wells
actually,
Fargo?
I started at Countrywide.
Oh, you started
I worked at
Countrywide.
Countrywide for probably about a year. I had a cousin who was in the mortgage business, kind of like my big brother, and he was doing well. And it came a time where I was trying to figure out, you know, how I can make some money, some real money. And I talked to him about it, sat down and talked to him about it, kind of got an idea of what he was doing. I had a business background, a finance background, so it kind of made sense. And after talking to him, I started to take steps towards getting into the mortgage business. So initially, I was at Wells Fargo. So I started at Wells Fargo as a banker because at the time, early 2004, five-ish, somewhere in that area, a lot of mortgage companies didn't want to hire you unless you had mortgage experience, and I didn't have any at that time. So started at Wells Fargo as a banker just to get my feet wet with finance and sales, basically. And then once I got over there, started talking to different people. A couple things happened, and then I ended up at Countrywide. A friend of mine that went to high school with me, he was a team lead over at Countrywide, and I told him I was looking to get into the business. Interviewed, went through all the steps, and boom, my mortgage career was started.
Okay. And then how did you get over? So you was at Countrywide for how long?
About a year,
About
little less than a year. So as soon as I left Wells Fargo as a banker and took a mortgage job, naturally they started recruiting me as a mortgage person at that point, right? I have
Oh,
friends, who worked at Wells Fargo and weren't doing mortgage, but they knew mortgage managers. And I'd done all right as a banker, did pretty good, made a name for myself. And they were telling the mortgage managers, hey, you should talk to Lavega. He's kind of up and coming. He wants to get into the mortgage business, blah, blah, blah. And long story short, was at Countrywide, learned how to do a loan. So we were on the phone. That was when everything was a, refinance call, learn how to do a loan over there.
what
Once I
year was
got
that?
comfortable with everything,
About what year was that?
this is 2005, 2004. So from 2004 to 5, somewhere in there,
So
I
that
started at
those are the good times.
yeah. And so I started with Countrywide November of 2005. So I'll be 20 years in the mortgage business come November of this year.
20
Yeah,
years?
20 years are
Well, I don't know what
done.
I'm talking about. I'm going on 23 in real estate. So
Aging myself right now. So but yeah, 20 years come November. But yeah, started Countrywide, was there for a little bit. They started recruiting me at Wells Fargo. Once I felt comfortable and because with Wells Fargo it was more relationship based, so you needed to know, when I was at Countrywide, I had a team lead sitting right next to me so I could put a client on hold and ask them a question if I needed to. With Wells Fargo, you're going to be live and direct in front of the client in the bank. So I wanted to get comfortable with everything. Once I felt comfortable, I went ahead and made the move back to Wells Fargo, and I was there for 17 years.
17 years. Wow.
17 years, yeah.
And now, so then you recently left, right?
2023, July 2023. I went to
What's
broker world. So now I work at Greenhaven Capital. So we're broker, meaning we have access to about 30 different banks that we can send your loan to. Difference between a broker and like Wells Fargo, who's a direct lender or a retail lender. There's one way, that's Wells Fargo way when you're dealing with the bank, basically. When you're dealing with a broker, we got 30 different ways of getting a loan done, basically. So some are going to be more conservative. Some are going to let things, be okay with some of the things that, Wells Fargo may not be okay with. So for me, it was time to expand and just be able to, I wanted to have more access to everything as opposed to just one way of looking at things. So it was natural for me to do it.
and then you coach too, right? Do you coach or no?
Nah,
Now, why
nah.
did I think he was coaching like sports or something?
I help out. I play basketball. So I played basketball in college. So I
Okay.
played basketball at Cal State Dominguez Hills for 2 years, from like 98 to 2000. And
Hmm.
then once I was finished playing, I came home and finished my degree at Sac State.
Oh, okay. We're gonna get it. He got a presentation for you. Y'all just hold on. I just want y'all give the history of my brother. Okay. So
Yeah.
I mean, most of y'all know, but we gotta give those of you that don't know, we gotta give you that history. So what has like in mortgage, why do you love doing loans? Because I hate numbers and stuff. You know what I mean? And
I'm good at numbers. I'm good at numbers. I would say I like helping people that like it's no better feeling that when I help somebody buy a house for the first time or not even the first time, it could be their dream home. If I can put you into a better position than when I met you, that's a good feeling and people are appreciative of it. Not all clients are appreciative of our time, and some of them, think that we get paid by the hour as
right,
opposed to when the deal closes. But
right.
For the people who are appreciative and understand what I bring to the table, it's a good feeling to help somebody out, you know. But I've always been good at numbers, always been good at math, you know. And then, quite honestly, the mortgage business, you can make the kind of money you can make. It's not readily available in most professions. So um, I like to make money. So and it's like hustle driven, meaning that, you know, as hard as I work, I should see the return. Whereas some jobs, you know, no matter how hard you work, you're going to bring home the same salary every month. I like the fact that I control a lot of my income.
Do people always ask you when the rate's going to go down, and
Of course,
and about all these down
if I
payment
had a
assistance?
penny, if I had a penny for every time someone asked me about an interest rate, I'd be a billionaire probably. So yeah, definitely all the time.
How do you handle that? Like when people ask you, like when the rates are going to go down, the rates are too high, and because
Right.
let's keep it real. When we first started in this business, you 20, I'm 23, right?
Mm.
Rates, I think rates were like 9%.
Yeah. Well, I think that people who are older understand what a normal market is. It's the younger people who saw maybe the pandemic or even financial collapse 2008 and 9 and think that, you know, rates are going to be in the threes and fours. But the only time rates are in the threes and fours if something very, very bad is going on. If we're in a normal economy, that's not regular. You know, rates in a normal economy are going to be somewhere between 5 and 6. You know, if something really bad, because a lot of people don't know this, but basically, for when it comes to mortgage, if the economy's doing bad, that means you're going to have lower interest rates. If we're in a booming economy, everybody's making money, everybody's doing well, interest rates are going to be higher. So, unfortunately, for mortgage people, sometimes we have to root for bad stuff with the economy because that's what's going to bring lower rates. But um, you know, it's give and take. It's a balance. You know, a normal market, you're not going to see rates in the four. I don't think we'll see rates in the fours anytime soon. So for anybody waiting on that, you know, you might be waiting for a long time. What the idea behind buying a house is you want to get in as soon as you can and start creating equity. And then when the opportunity comes to refinance and get a better payment, then you take advantage of it. But if you're paying somebody else rent every month, that's money you'll never see again. At least with a mortgage, you know, every month you make that payment, it's like throwing it into a savings account for yourself.
Well, I always say that you can refinance the rate. You can't refinance the price that you pay for a home because
Right.
people do not realize. Hey, Mac Block, what's up? Mac Block watching us.
What's
You
up,
know,
Mac?
we have, because when the rates go down, you got everybody out there buying, and you got to overbid and get bid out and stuff. And
That's what's going to happen once rates do come down some because everyone's holding out right now. You're going to see it turn in from a market where you may be able to get a seller to give you some sort of kickback for a 2-1 buy down or take care of a repair. But once rates come down and it's a lot of buyers in the market, seller's going to tell you, buy this as is because I got somebody who's giving me $20,000 over what I'm asking already, you know? So,
right, right.
um,
And then guess what? It'll be on the news. Oh, people are overpaid for homes.
yeah. Yeah, I mean that's what happened in the pandemic, though. You know, everyone was trying to buy.
Yeah.
People were overpaying, and you know, a lot of people thought values were going to come down. They haven't. Sacramento, to me, is its own anomaly, meaning that um, you still have a bunch of people. If you want to live in California, SoCal is very expensive, and the Bay Area is very expensive. We're the next best thing going. So I don't see, you know, there's going to be an influx of people coming to Sacramento for quite some time. And as long as they're coming here, you're not going to see values go down. You may see them steady out a little bit, maybe dip a little bit, but the huge drop that a lot of people are waiting for or thinking is going to happen, it's not going to happen. You're better off getting in as soon as you can. And like I said, if rates do come down, then you want to refinance and get you a better payment. But you'll be waiting forever if you're waiting for the opportune time, basically.
Well, speaking of questions, our friend Matt Block I think you just answered his question.
Hmm.
He said, how long should we wait until we buy? Now.
You should buy now, Mac. As soon as you can. As soon as you can afford a house, you should buy it because you're it, like I said, it's not the values in Sacramento, you know, it's not going to come down anytime soon. The longer you wait, the more prices are going to go up. If you buy now, you can afford it. As soon as you can afford it, you buy, refinance once the rates come down and get you a lower payment. But in the meantime, you're creating equity. The whole thing is to start creating equity. Some of the stuff I know now, I wish I knew,
Mhm.
way back when, because I would have started trying to buy property a long time ago.
And I think, and I've said this before, one of the biggest issues right now is people not making enough money.
For
You know what I
sure,
mean?
for sure.
With the debt to ratio, they have high car payments, they have the
Yeah.
student loans, and you know,
Affordability.
they feel like, oh, I got a 700 score, but oh, I could buy any house. No,
No,
it's all
no.
about, how much you
Well,
bring in versus you going out.
when you want to buy a house, there's a few things that lenders looking at. Your credit score. So the better your credit score, the better loan you're going to get. Your income, so debt to income ratio. Generally speaking, your debt to income ratio has to be below 50%. That means whatever your gross monthly salary is. So say you make $10,000 per month, your gross monthly salary is 10,000. All your debts have to be below $5,000 per month. That means, and we're not talking SMUD and PG&E. We're talking credit cards, student loans, car payments, your mortgage payment with the taxes and insurance. So that's part of what they're looking at. And then your assets, how much do you have for a down payment? There are ways around the assets. There are down payment assistance programs out there that will help you get into a home. But you definitely want to have as good a credit score as possible. That's going to help you get a better loan, and then stable income.
Now, regarding the down payment assistance programs, a lot of people think, okay, we still try to ask for seller credit, even with the down payment assistance, right? But they
Right.
still got to bring their own money in,
You're going to
besides
have
the
to bring
earnest
money
money
in.
deposit, besides
Yeah.
inspections.
Yeah.
How much of they got to have, what, 3% still, right?
Somewhere in that area, because the down payment assistance will get you your down payment, and even in some cases it'll get you closing costs. But if you do just look at it this way, there's no such thing as a free lunch, right? So if you're getting down payment assistance and closing costs, where's the money being generated? Then they're going to charge you a higher interest rate, right? Charge you a higher fee, loan fees to get that done, right? Because this is business, so everyone's trying to make money somehow, some way. So you're going to need some sort of funding. That you're going to get a better loan if you have your own down payment. But if you don't, there's a way to get in, but you're going to need something. I tell people, save 15, 20,000. If you can save 15, 20,000, you should be able to figure out a way to get into a home if you need down payment assistance, because you're still going to have to pay for, like you said, inspections, things along the way, an appraisal. Um, there's some things that's upfront that you're going to have to pay for. And the more you have of your own money, the better loan you're going to get.
They have the better rate and everything too. A
Better
lot of
rate,
people don't realize
yeah,
that.
better scenario overall.
There's gift fund, try to, if you have a rich auntie,
Yeah,
parent,
yeah,
something, gift
yeah,
funds,
yeah.
and stuff. Whatever y'all work out, that ain't none of our business. We just know
Right,
we're giving it
right,
to
right, 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 right,
you.
right.
So,
Yeah, no gifts. I see a lot of people getting gifts. If you have a family member, some parent, auntie, cousin, whoever can help out, um, that definitely helps.
okay, cool. All right, you ready to now that we got a little history and gave you guys some information on, loans and buying a house and everything. Let me go ahead and make you co-host. I'm gonna walk him through this, y'all. So y'all be patient
Yeah,
with
I
this.
told Alita, I'm getting old, so I don't. This technology stuff is not my thing. But we're gonna try to get it done right now.
All right, so I'm gonna make you co-host. All right, did you see it pop up?
Yeah.
It say co-host?
Uh,
No?
no.
Okay, you're co-host though. Okay, so hit the share button. You see the
Okay.
share?
Yeah.
Okay, so hit share and then go to whatever screen where your presentation is and click on it. Uh-oh, he's doing it, y'all. We getting there. We getting there. All right, so just got to find the presentation.
Can you see that?
Yeah, this might want to make it a little bit
Huh?
bigger. Can you make it bigger or no?
On
At
my
the top,
screen.
the little, oh, I'm pointing out like you're sitting next to me. Like make it full screen.
Hold
At
on.
the, you know, the little thing at the top
Uh,
next to the, I'll say go by the LS up at the top. You see it? I don't even see your cursor anymore. Oh, it's down there. Matt Block said, I see it. Oh, you can see it. It's good. It's good, Matt. Okay. I was trying to make it bigger for people who got bad eyes. Okay.
can you see it?
Yeah, we can see it. All right.
Here's a little video to get us started.
Okay. I don't think we'll have the volume on though.
Big corporation
Oh yeah.
or a bank.
It's not that hot. I can't really hear it though.
Let me turn it up.
Yeah.
Great stocks or offer checking accounts. He does one thing, and he does it better than anyone else. He shops for great deals on mortgages. So why get a personal shopper for your mortgage? Because you want an advocate. Choices. Lots of choices. Choices set up competition between lenders, and that's good for you. Salespeople at banks, big lenders, can't show you the big picture. But a broker compares deals from hundreds of banks and lenders of all sizes across the U.S., then organizes and presents those choices based on your location, financial situation, timeline, and other factors. He can then help you choose the best mortgage for your circumstances. And a better mortgage can save you time, frustration, and most importantly, $20, $50, even $100 or more off your monthly payment. So when it comes to the biggest purchase of your life, don't take the first offer that comes along. Get an expert who shops on your behalf. Get an independent mortgage broker.
So that just kind of goes over what the difference is for a broker in comparison to a direct lender or a retail lender. So we're shopping your loan to, everybody out there basically to find you the best terms. All lenders are going to be a little bit different when it comes to rate and fees. So we can find the best program for you. And then also some lenders may not allow, some lenders may be a little more lenient when it comes to credit scores or things like that. So when you're dealing with a mortgage broker, you're able to find the place for your home that best fits you, as opposed to when you go into the big bank, they have one way of looking at things. You want to have somebody who's looking out for your best interests and shopping around with everybody. So we do that for you, basically.
Okay. So you want to talk about your conventional loans and stuff, kind of educate people on.
Yeah, so conventional loans. So that's going to be the program that you see most people use. If you have pretty good credit, you have your own down payment, good credit history. Those are the loans that you see the most. I would say, a lot of first, we'll get into that in the next slide, but a lot of first-time home buyers probably use FHA if you've had any type of credit issues in the past, or any type of credit, derogatory stuff in the past. FHA is going to be a lot more forgiving than conventional. Conventional is a smaller box to fit you in. But if you fit in it, that's probably going to be the best way to go as far as the terms of the loan, rate, cost, and things like that. So generally speaking, for a conventional loan, you need to have at least a 620 credit score. Minimum down payment is going to be 3% down. They're fixed rates, they're adjustable rates. 20% down. So a lot of people may not know this. I know this is probably some people who are maybe thinking about a mortgage for the first time. When you buy a house, there's four components to your mortgage payment. There's going to be the principal and interest payment. There's going to be mortgage insurance, your property taxes, and your homeowner's insurance. So principal and interest payment, that's the loan amount and whatever rate you have, and then the monthly payment, right? Property taxes, so you pay that to the county. If you own a house, you got to pay property taxes, and then homeowners insurance, that's in place just in case something happens to the home. And then the one that people don't know a lot about is mortgage insurance. That's in place to protect the lender just in case you go into default. So the riskier your loan, the higher your mortgage insurance is going to be. So if you have a better credit score, you're doing a larger down payment, things like that help out with the cost of mortgage insurance. If you do a 20% down payment, regardless of your credit score, on a conventional loan, you won't have mortgage insurance. So
Are you seeing a lot of Melrose?
for sure, you know, I work with a builder. I've worked with Beazer Homes since 2017.
Mhm.
And anytime you're buying new construction, you're going to see, or in a newer community or new construction, you're going to see Melrose, which drives up your property tax bill a little bit. Yes, definitely see that.
And that's included in the monthly payment, right?
That's included within your property taxes. So it'll be when you get your property tax bill, it'll be taxes and assessments. You'll see a portion that's dedicated directly to Melrose, basically.
Yeah.
But yeah, that's conventional loans. You know, I would say the majority of the loans that I do fall into the conventional space. You know, if you have good credit and you got a decent down payment, that's probably going to be the route to go. But don't let that discourage you if you don't, because there are other ways to make things happen. That's just the box that most people will fall into if they have a pretty decent situation.
Okay.
All right. So what we got next? So FHA. We just talked about that. FHA is a lot more forgiving when it comes to credit history and credit scores. So on an FHA loan, you actually can go as low as a 500 credit score. They require a little bit more of a down payment if you have a 500 credit score. So a normal FHA loan, if you have a credit score above 580, 3.5% down payment will get it done. But if you have a credit score below 580, you know, you're a riskier client, basically a riskier borrower. So they're going to require a larger down payment. Still a way to get things done. Some people have money and income. They just have bad credit, you know. So FHA is a way to get things done, even if you've had some issues in the past. They're mostly concerned about your most recent 1 to 2 years of credit history. And if you've had any type of issue in the past, like a bankruptcy, foreclosure, short sale, the amount of time you have to wait to be able to buy a house again is a lot shorter for an FHA loan in comparison to conventional. So we do a lot of FHA loans also. And quite honestly, depending on where your credit score falls, even if you have a good credit score, sometimes FHA gets you a cheaper payment than a conventional loan. So there's nothing to frown about with FHA loans. When I bought my first home, I did an FHA loan. At the time, it was the lowest down payment. Conventional loans weren't there yet with the 3% down. That's come about. It's been a while now since we've had a 3% down conventional loan, but sometimes the mortgage insurance may be a little bit more expensive. FHA loans in general have lower interest rates than conventional loans, so you get a lower payment sometimes with FHA. So some of my clients will look at both options and just figure out which one has the best payment and best long-term conditions for them. The tough part about an FHA loan is so on a conventional loan, when you have mortgage insurance, you do less than a 20% down payment. You're going to have the mortgage insurance will go away basically once you have about 20% equity in your home. On an FHA loan, the mortgage insurance is there for the life of the loan. So to get rid of the mortgage insurance, if you do a 3.5% down payment, you're gonna have to refinance to a conventional loan, basically. So most people go into an FHA loan knowing, okay, I'm gonna do this, get a lower payment for the first 2 or 3 years, take advantage of that. And then once I pay my balance down, my property value is going up, I have 20% equity in the home now. Let me refinance from this FHA loan to a conventional loan, get rid of my mortgage insurance.
Okay. And FHA, does that stand for Federal Housing Administration?
Yep.
Okay.
Yeah, it's government basically. I mean, for the most part, the most loans are backed by the government, whether it be Federal Housing Administration or Fannie Mae, Freddie Mac. They're not necessarily direct to the government, but the government is the one backing your home loan for the most part.
Okay.
All right, so what else we got here? We got VA loans. So this is going to be specific to veterans and someone who's in the active military or used to be in the military. Good thing about the VA loans is they allow 100% financing. So that means you don't have to have a down payment if you're buying a house and you're a veteran. You can get 100% financing, and then what we just talked about with FHA and conventional, even if you don't have a down payment on a VA loan, you won't have mortgage insurance, which is the beauty of a VA loan. I guess the country is tries to take care of our military people. So that's why they offer the option of 100% financing without mortgage insurance. And then again, with VA loans, a lot more credit forgiving than a conventional loan. You can go as low as a 500 down payment. They do come with, unless you left the military with some sort of disability, there's a VA funding fee that you finance into your loan amount. So it's a little more expensive, but it's not something you pay out of pocket. You're just financing it. And that goes back to what we were talking about earlier. Like there's no such thing as a free lunch. So if you're getting a loan with 100% financing and no mortgage insurance, how do they generate some funds? That's the VA funding fee, right? But you don't have to pay it out of pocket. It can be financed into the loan amount, and usually it changes your monthly payment. I would say $50-$60 a month. So well worth it, basically.
So with the 500 credit score, you can still get 100%, financing? Okay, so let me let you guys know, okay, don't get it twisted. When they say 100% financing, you still got to put your
You
earnest
still
money
have to have money for
deposit.
your closing costs.
You still got to pay for inspections. You still got to pay for
Yep.
appraisal.
You still got to pay for your closing costs. So you're still looking, best case scenario, I would say 10,000, a good number for closing costs and everything associated with escrow, 15,000, somewhere in that area. That's
Okay.
why I encourage people to put as much money, budget yourself and put as much money as you can away, because once it's time to buy a house, the more money you have, the better off you're going to be.
Well, what's your comeback when somebody says, well, you said it's 100% finance, so why I got to come up with some closing costs? Why I got to pay more money, I think?
Well, I'm not the guy who makes the rules. I'm just the one who's communicating them to you, so that's way above my pay grade, basically. But yeah, there's no way around it, Now the beauty of a mortgage, when you do a refinance, you're usually able to finance that cost into the loan. So when you buy a house, you got to pay for your closing costs, right? Their closing costs on a refinance too, but they allow you to finance that into the final loan amount on a refi. When you're buying a house, you got to pay that money out of pocket, basically, unless the seller is giving you some sort of incentive, which is why a lot of people like to buy new construction, like with Beazer Homes, the builder I work with. They generally give anywhere from, I would say, $10,000 to maybe $40,000 towards your closing costs. With that money, you can get a better loan, buy your interest rate down, do some type of temporary buy down program to get you a lower rate, lower payment, a lot of different things you can do with that. So the more money the seller's willing to give you towards your closing costs, the better loan you're going to be able to accomplish, basically.
All right. Okay.
All right. But yeah, VA is a great product for people who, if you're a veteran, that's the way to go. Most of my veterans that buy, they use a VA loan. Sometimes they'll go conventional if they're doing a large down payment because they don't want to pay that VA funding fee. But the other thing with the funding fee is it does go down based off of how much of a down payment that you're giving. So,
And also with I know you're a broker and you probably go through different, have different resources for your VA. But on the ones you've done, do people need to have Section 1 and Section 2 cleared, or they just need like that? I forgot what that one piece of paper saying that it's not infested.
both. So it's usually Section 2, right?
Section 1,
that you have to
usually
have
Section
cleared.
1.
But you can also do, I can't think of the name of that form right
Yeah,
off
me
the
either.
top of my head right this minute. But you can do that too, what you're talking about. Either one will work. That's the other caveat to VA financing, is that they're going to do a pest inspection, and any type of pest issues have to be taken care of. Probably just the VA, the Veterans Administration, looking out for veterans. They don't want veterans buying houses that have some type of pest issues. So any type of, pest issues that's seen on a pest inspection, they're going to want that cleared before you can get VA financing on a home, which again, it's a good thing for veterans. They're protecting them, making sure that they're not buying a house that's, in bad condition, basically.
Now, pest, you guys, does not mean rodents. It's termites.
Termites, yep.
Yeah, because most honestly, most pest inspectors, they will let you know if they see droppings, but they're not really looking for what they're looking for, the termite stuff that's eating away the house.
Eating away at the foundation of the home or the outsource of the home. So yeah, for sure. All right, so other loan type, USDA loans. Quite honestly, I don't do a lot of USDA. It's for rural areas. Some of Sacramento, like the outskirts, fall within that. So if you're like in Wilton, maybe some pockets in like Auburn and El Dorado Hills, you may fall into that section. But for all of us who live within the city, you know, USDA is not going to be something that you can utilize. But if you're, you know, interested in country areas, you can always check with the loan officer to see if USDA financing is available based off of the area that you're living in or the county that you're living in. But with USDA, it does offer 100% financing, minimum 640 credit score, but you can sometimes they'll allow you to go a little bit lower. It's a good loan program, but you got to live in the country. I don't know about you guys, but I don't want to live in the country. So maybe not yet, at least. Maybe in another 10 years or so, maybe I want to buy somewhere way out and get away from everybody. But right now, I'm good in the city.
I'm with you. I'm with you with
All
that.
right. Okay, and then let's see here. So jumbo loans. So jumbo loans are for conventional loans, FHA loans, conventional loans in Sacramento County go up to 806,500 right now. FHA loans, you can get a loan all the way up to 763,600. If you're going over those loan amounts, then you're considered a jumbo loan. When you're in jumbo loan territory, usually the bigger banks are going to be best when it comes to that type of product. When I say best, I mean as far as interest rates. There are myself, such as a broker, you know, we do jumbo loans as well, and we're very competitive when it comes to that. But you know, your Wells Fargo's, your Bank of America, your Chase, U.S. Bank, they usually have a little bit better product, but because it's them who's doing the backing of the loan, so it's not Freddie Mac, it's not Fannie Mae, it's not FHA loan. They're making all the criteria for what qualifies, and it's a lot harder to qualify for a jumbo loan. If you do need a lender to be creative and you don't have a great scenario for a jumbo loan, guess what? You're going to pay a higher interest rate, basically. But jumbo loans, generally speaking, they want you to have a 20% down payment. There are lenders out there that'll do a 10% down payment, but jumbo loan is just the word itself. Like you're buying much more house. So when you're buying much more house, the person who's lending you the money, they're going to make all the criteria for what qualifies, and then they dictate everything going forward as far as the rate and everything associated with that. So if you're buying a lot of house and loan amount's going to be above 806,500 in Sacramento, or if you were doing an FHA loan or looking for FHA financing and it's above 763,600, then you're falling in jumbo category. I would say be prepared for 20% down payment. You want to have as high a credit score as possible. And a good track record when it comes to credit, because they're very stringent when it comes. You're buying a lot of house, you're getting a big loan, so that person wants you to be well qualified.
Yeah.
And let's see here. And then so for everything that falls outside of a jumbo loan, a FHA loan, a conventional loan, a USDA loan, or anything that's pretty much backed by a big bank or the government, there's non-QM loans. So that just means people may have heard the term a hard money lender, someone who has their own money and they're lending the money, right? So some people want to, if your scenario doesn't fall into that box that they want you to fit in, there are alternatives, a non-qualified mortgage or QM mortgage. But if someone's lending you money and you're a riskier situation, if you were lending the money, well, what would you do? It would come at a cost, right? It would come at a higher rate, higher fees, more prepayment penalty, things like that. They usually want a larger down payment because you're a riskier client. But for some people, you know, some people have a lot of money, but maybe no credit history, no income, you know, because generally speaking, if you're borrowing money, lender wants to know how much money you make on a monthly basis, a yearly basis. If you just have a whole bunch of money sitting around and you want to buy a house, but you don't want to use it all to buy the house, non-QM loans, there are ways to get it done. If you had some type of foreclosure, short sale within a short amount of time, and the bank says, or a lender says, you know, it's not far enough away from when you had your short sale or your bankruptcy, the non-QM loans are a option for you. The thing about a non-QM loan, usually if you get it, it's a short-term fix, meaning, you know, I just need this money for a year to get into the house, get everything situated, and then my situation will be stabilized in a year, and I'm going to be looking to refinance to a conventional loan, FHA loan, jumbo loan. Usually non-QM loans are not a long-term thing. It's something that helps you short-term get into the house, get the transaction complete, and then you come back once your situation is a little bit better and refinance out of the loan. So it's just a way to get something done when you don't have the greatest scenario that fits into the box that they want you to fit into. All right, and then we talked about this a little bit earlier, down payment assistance programs. You got, you know, the one that I use the most is Cal HFA. Alita, you're probably familiar with Cal HFA. You can team it up with a FHA loan or a conventional loan. Basically, what they do is they get you your down payment. So if you're doing a conventional loan, 3% down, it's going to be minimum down payment. That's Cal HFA. FHA loan, 3.5% down. They'll get you that down payment. They have a minimum credit score of 640. Depending on your debt to income ratio, they want you to have a higher credit score. So if you're above 45%, they usually want you to have a 700 or above, but they'll go as low as a 640, depending on what the debt to income ratio is. So for people, say like you're someone who's fresh out of college, you just got a good job, you're making some money, haven't been able to save money yet, but you make enough income to afford a house, you just don't have the down payment. Cal HFA is a great program for those type of clients. One that I utilize a lot for clients who, you know, are making decent income. They just don't have the money just yet for the down payment. Because what happens is once you get into the home, you're making that payment every month, balance is going down, property value is going up, and you're creating equity for yourself. So again, going back to what we said earlier, you know, you want to get into a house as soon as possible. And if Cal HFA or any type of down payment assistance program can help you get in there faster, you want to utilize that. There are some downfalls to Cal HFA or any type of down payment assistance program. At some point, usually if it's not a grant, you got to pay it back at some point. Makes it a little bit more difficult to refinance. You're going to have to pay it off if you're going that route. But if your scenario falls in that category where I have money, but I just don't have the funds and I'm ready to buy a house, it's a great tool to help someone get into a home, you know, a little bit faster, basically.
Now, what about non-occupant, you know, ones? Because I had a mother one time, speaking of, her son was going to school, they wanted a condo, so she was a non-occupant, how do you say it? Borrower.
Non-occupant co-borrower.
Yeah, how does that work?
From what I understand, Cal HFA does not allow that.
Okay. What if it's like period without calificate, you know?
So being a broker, there's usually a way for us to find someone who can help you, right? The rarer your situation is, the more it's probably going to cost you, you know, to get it done. But there are lenders out there where you don't have to be a first-time home buyer to get down payment assistance. You can have a non-occupant co-borrower. So if you don't fit into that box, there are ways to get it done. It's just it gets a little more tricky when it comes to the financing.
Okay.
But if you can fit into that Cal HFA box, if you got a little bit of money and you're ready to get into a home, then it's definitely a good thing.
Okay.
So a little bit about us. So we're a broker. We don't charge. We can get you low rates. We shop your loan around to 30 different lenders, figure out who has the best case scenario for you. We don't charge lender fees, so we're not charging you processing, underwriting, admin. Those are all fees you're going to see from most lenders. Just that alone saves you, I would say, anywhere from $1,000 to $2,000 in fees. So we don't charge those. We're a small company, so we keep our overhead low. We don't have a bunch of employees. But with that being said, because we're a small company and we move so fast, we want clients who are committed to using us. And if you're just, looking to leverage us against something else, not the type of client we really want to deal with, to be honest with you, because we're already putting our best foot forward for you by waiving some of the fees that other lenders will charge you. But yeah, I rarely lose a loan because of someone offering a lower interest rate, unless it's some sort of, gadget program that only this lender is offering, and that borrower kind of fits into that category. But we have very low interest rates. We have very quick turn time, so I can close a loan. And this says 14 days. I've closed loans in like a week if need be. Access to multiple lenders and loan programs. So, like I said, we got 30 different banks that we work with and that we can send your loan to. So we'll find the best home for your file. Conditional loan approvals in 24 hours. So sometimes I can submit a loan the same day and get an approval. So fast. To most people, that may not, it probably doesn't register, but if you've been in this business for a while, some lenders, it takes a week or 10 days to get a loan approval or for things to get turned around. We're not one of those lenders. Everything moves fast with us. Coming from Wells Fargo to the broker world, I can say this, and I'm not the type of person, I don't bash Wells Fargo. I worked there for 17 years. I made money there. I made a lot of relationships there. I done well at Wells Fargo, so I don't talk bad about them. But going from there to the broker world it's a lot of things that are night and day from what we can get done and how fast we can get it done compared to how it used to be. So, and that's a big part of the reason why I decided to make the move, because I needed to speed up the process and have access to better things, basically. So let's see here. No cap of DTI with AAUS approval. If you go over 50, so we still get an approval even if you're over 50, which is rare. We don't see that as much, but most direct lenders will tell you if your debt to income ratio is over 50%, deal is dead. If we still get an approval from the system, we'll do the deal. So that may save a deal, may not, but it's an option. You want to have as many options as possible when it comes to, if you're a loan officer and you're doing loans, you want to have as many ways as I can get a loan done. I want to have them all if I can. So that's a good thing. Credit score is down to 500. So I don't encourage people to have a 500 credit score, but we still may be able to get something done for you if you have a 500 credit score. We got down payment assistance programs. We got 1-year tax returns for self-employed programs. Think about it this way though, if you're the more riskier your scenario is, or the more outside the box your scenario is, it's going to cost you more. And that's just the way lending works across the board. Alita, you know that. So
yeah, big time.
let's see, no tax transcripts for wage earners, so we don't have to pull a 4506T. Appraisal waivers for purchase and refinance loans. So depending on if you're buying a house and you're putting a large down payment, you may not need an appraisal, which saves you another $600-700. Refinance, same thing. If you have equity in the home, you may not need an appraisal. We can do jumbo loans up to $5 million. We table fund, meaning we can fund a day of.
Love it.
Yep.
Us realtors love table fund.
Yes. And then, so we're correspondent lender and we broker. So sometimes we're like direct to the lender, or sometimes we're doing a broker deal. But we have both options, whichever works best for the client. And then, some of the stuff we talked about earlier, FHA, VA, USDA, reverse mortgage. I don't do reverse, but we do have access to it. And then non-QM loans. And then the big thing, more lenient credit guidelines. So coming from somewhere like Wells Fargo, who has a more conservative approach, we have lenders who are more lenient and let things go that maybe some other lenders wouldn't do, which may save a deal or two. And you always want to have as much access as possible.
All right.
And then for those interested, there's all my information. If you want to get in contact with me, I'm not hard to find.
And You know, I need to bring this up though. You've been doing videos and look, you talk about you're not tech savvy, but I've
Uh,
been wait a
Oh,
minute, I
but you
have not
know, that's
thought
the
about that.
company. That's the company. They bring someone. We have a marketing company that comes in and does all. I mean, we make the script, and then they come in and do all the editing and all that stuff. So, another positive thing for me, in this era, the internet age, a lot of times the clients, the first thing they're going to do is Google your name, right?
Mhm.
I want to make sure when they Google my name, the right stuff pops up. So, that's part of the videos. And then, you want to be top of mind whenever, you never know when someone's ready to buy a house and they're like, I saw Lavega do a video and he talked about this. You know what? I'm ready. I'm going to call him. So, I wouldn't say they generate a ton of business, but it's good practice for talking in front of people. Even though it's just a camera and it's not actually an audience, but it's good practice for that. Also make sure that, when my clients go look me up or go check me out, they see the right stuff.
Right. Now my broker done jumped on here, Kiera Norman. What's up? What's up, Kiera?
What's up, Kiera? How are you?
You know, I just joined her about
I saw
it's
that.
funny.
I
Yeah.
met her. I met her last year at a SAR.
Oh, did you? Okay.
Yep.
Yeah.
Yep.
Yeah, so I'm excited. Like I said, if one of our interviews and stuff, I was like, boy, we've been friends for a while. She's been trying to get me over to her companies, and I finally joined her company. So,
God's timing, right?
huh?
It's that God's timing, right?
Yeah, exactly. So now, thank you so much, Vega. I mean, we done came from the music world to the real estate world, and look
Mhm.
at us, 20 and 23 years up in this business. We still here and stuff.
20 years come May.
Yeah,
Excuse me, come November.
right. It's crazy. It's crazy. So we done came a long way, but I just want to give you I don't know if we should. Yeah, we can say this to men. I want to
Hmm.
give you your flowers.
I appreciate it.
I want to give you your flowers. You know what I mean?
No, I've been at it
Because
for a long time. Made it through a bunch of different markets, and the
yeah,
last I would say 6, 7 years or so been real good. I'm blessed. So just trying to keep it going, help as many people as I can. I like to make money, so I'm trying to make as much money as I can.
right. What's your IG?
Mortgage Pro CA.
Mortgage Pro CA and the
Yeah,
Facebook.
Mortgage Pro California. Mortgage Pro CA.
Okay. And what's your Facebook handle?
My name, Lavega Sims.
The Vegas Sims.
Yeah.
Okay. And your hours?
I mean, I'm always working.
Good answer.
I'm always working.
Good
When
answer.
you're in real estate business, I mean, the majority of the business happens on the weekend. I work with a builder, so for the most part, if someone's walking into that builder on the weekend, they're going to be calling me and asking me to run payments or asking me different scenarios and things like that. So, yeah, I'm always working. I'm not hard to find.
Yep. So, but just remember, you your kids grown or
I
what?
don't have kids.
Oh, wait a minute.
I do not have
Wait a
kids.
minute.
I do not have
I
kids.
thought
No.
you had kids.
I don't have kids. No, I don't.
Oh,
I don't
wow.
have kids. It
Okay,
ain't over
so
yet though. You never know. But as
well,
of right now, no kids.
look what our friend Adrian Ross, he had one he was
Yeah. Yeah.
Adrian
Yeah.
was he
Us
was
men,
working.
we got a little bit longer, got a little bit
Y'all
longer
be
years
having
than that.
babies all the way up to
You
y'all
know,
50 and 60. It's just ridiculous.
yeah.
Anyhow.
But if it's gonna happen for me, if I'm gonna do it, it's gonna happen sooner than later. But as of right now, no kids.
All right. So y'all got a loan officer that's been in the business 20 years.
Hmm.
He don't have no kids, so look, call him anytime.
Yep.
So,
If I
but
miss the call, I'll get back to you as soon as I can.
yes, and your office, do you usually have people come to the office? Do you meet Zoom?
Yeah,
What do you
I
like
mean,
doing?
by appointment. I work remotely for the most part. I go to the office sometimes. When we shoot videos, I'm at the office. If we have an appointment, I'm at the office. If we need to meet at the office, we can. Our office is right in Southland Park.
Okay. Now, I need to bring this up. What tools do you have to network with realtors?
Meaning like, what do you mean?
like, to like, when you partner realtors, is there any like marketing tools or anything like that you have, or
Well, I
what do you?
mean, part of it, I try to encourage the realtors that I work with, let's do some content together because that's what's big right now, right?
Mhm.
So, our company, we shoot the videos you just were talking about.
Uh-huh.
That's on the company dollar. I don't pay for those. The company pays for that. And we
Okay.
can always make a video and cross promote each other. So that's the biggest thing I think, we offer right now as far as networking. It's like, let's do some videos. It's going to be quality content. Doesn't cost you anything. You can post it on your site, post it on my site. Let's help each other make more money.
So do we come to the office to do
Yeah,
those videos?
yeah. You would come to the office.
Okay. Is it available to do on the weekends or what?
Well, usually what we do is we shoot once a month and we'll
Okay.
shoot multiple videos and then release them,
Okay.
on schedule basically. But if you're interested in doing some stuff together, I'll let you know the next time we're shooting and we can figure out what makes sense for us to talk about.
All right. You hear that, Kara?
Yeah, bring Kiera too.
Yeah. And then so you guys do flyers for the realtors, or do we have to do? I know,
I can
I
do
know
that.
there's a
We
lot
can
of.
do that. I have a way to
Okay.
do that. Yeah.
Okay. All
Yeah.
right. And open houses, do you do open houses with the realtors?
I don't do as many open houses anymore. I mean, I'm not against it, but I don't because I work so much for the builder on the weekend that and that's where the majority of my business comes from, I would say.
Mhm.
Not against open house, so if we can figure it out, but I don't do them as much as I used to say 10, 15 years ago.
Okay. So that builder, where's that at? What location are they at
So
now?
Beezer Homes, they have communities in Roseville. They have
Which
a
one
new
are you at?
community in Rancho Cordova. They have communities in Elk Grove. Starting a new community in Vacaville. Community in Folsom. So they're all through Sacramento.
Do you work inside of Beezer?
No,
No, okay.
I'm just one of the preferred lenders. So the way the program works is called Mortgage Choice. So there's 4 of us. We compete for the business. So if you go in there and you're interested in one of their homes, they're going to hand you a piece of paper and they're going to say, here's all 4 of our lenders. Give one of them a
Oh,
call. But I would start with Lavega.
right, Lavega, yeah. Yeah, that's who y'all say. That is exactly who y'all say. All right. All right. Anything else before I let you go?
Nah, I appreciate it. We go way back, so we need to do some more business together.
Yes, most definitely. So before I end this thing, I just want to let y'all know, it's going in tonight. I got a 4-bedroom, 4-bath, 3-story condo in Natomas. HOA is about 310 a month. It's gonna be listed for 430,000. All right. So and then later on this week, I'm gonna have a 1-bedroom, 1-bath condo in Rosemont, gonna be listed for 195,000. And I think the HOA is in the 300s there too. Okay. And then next week, you guys, I'm gonna be listing a 3-bedroom, 2-bath home in Rosemont. All of a sudden it's Rosemont, La Vega. I
Nah, yeah, you
feel like the
cracking in
Rosemont Plain.
Rosemont.
But that's gonna be close to like 500,000. But if you're looking for a condo, and the condo in Rosemont has to be owner occupied, unfortunately. Has to be owner occupied. The 4-bedroom, 4-bath in the Thomas, it does not have to be owner occupied. So, and it's 3 stories. So realtors, those of you that's listening, please do not schedule an appointment and you get there talking about too many stairs. It says in there it's 3 stories, okay? So it's a 3-story condo, but where can you get a 4-bedroom, 4-bath place in the Thomas? So, all right, don't forget, call La Vega. Once again, what was the Instagram?
Mortgage Pro CA.
Okay, and then Facebook is Lavega Sims. All right. Talk to you later, and I appreciate you.
All right, Alita. See you later.
All right, bye-bye.
Bye-bye.